morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is December 22nd, 2012. Lots to talk about, so let's get crack-a-lacking. It is early in the morning today, but as always, I want to try and get this video out as soon as possible. And before I do, the most important thing is thank you very much for hitting those like buttons and responding to any of these posts. Or these videos. It just makes things a lot easier for me to continue on making it. So thank you very much. And if my speech becomes impaired, I'm gonna apologize ahead of time just in case, because I am a bit groggy right now. I'm through half a cup of coffee, but let's see if I can make it through this video as accurate and as what's that word? Anyways, good as possible. So let's get started. Alright, this is a chart of the SPY, which is obviously the ETF that tracks the S&P 500. And I didn't see any new subscribers subscribing, so I'm just going to continue on with all these lines. Everybody should know what I'm looking at and what I talked about in the previous video. Now, but just as a quick recap, as just a reminder, we had these two somewhat yellow levels here, which held up pretty well. We got a pullback here. This is when I shorted the market. In the last video, I told you guys that I initiated a short there. But this is a perfect example of why you need to either put a break-even stop as soon as you're in the money, or an in-the-money stock as soon as you're in the money. Yeah, I guess. The whole point being I was stopped out in the money, meaning I did make some profits, but I didn't make as much as I expected, meaning I wanted it to come all the way down here before getting a bounce. It was unable to sell off there. We did talk about the possibility of that not happening simply because of QE4 and this kind of other things going on, including low volume, which I'll get into a little later because that does not seem to be the case. However, with all the news going around with fiscal cliff and not fiscal cliff, or all that kind of stuff, it's just a volatile time of the month, or I should say of the year. In addition to that, last week or this past week was the week that options expired. I do apologize for not verbally mentioning that on last week's video, but I tried my best to warn you guys, putting up those little that posted up here saying that to be aware that it's going to be a volatile week. And sure enough, it was definitely a volatile week. We got some really nice support here at the 50 moving average. We already talked about when the two moving averages crosses over each other, just like over here, and I did some examples in on other places. But whenever you have this crossover, you're gonna have pretty good support and or pretty good resistance, right? We have some resistance over here, and then we get a pullback. That seemed to be on a technical level the case, and what we did was we started rallying higher. Now this rally, keep in mind, had to do not only with a technical rally, but including that, there was also the rally behind the market manipulation due to institutions, because it is the week of options expiration. So a lot of people, okay, I'm gonna have to say I'm probably not the only one that has this nice little trend line coming down here, and it's simply because it's an obvious trend line. If you are experienced with drawing trend lines, or not experienced, I should say, you can easily still draw this trend line and see that there was a breakout of this upper trend line here. The thing about that is it is the week of options expiration. The breakout of this upper trend line also was on pretty good volume, which indicated there is a possibility that we could have gone higher. Well, here's the key thing. We went right into this 145.07 level, and then we just pulled back the next day into this 144.30 level, okay? And to be exact, the close was 144.29, so I was 1 cent off before we got another bounce back into the 145.07 level again, to be exact, 145.14, okay? Now, anytime we break through a level like this one here, we need to validate, meaning another close above the previous day's close, meaning we had to close. So this red candle would have had to have closed again, my speech impairment, which I normally have but makes it worse because it's early in the morning, would have to have closed above this high of this candle here, and it did not. That told me that there was a possibility, or a high probability I should say, that we would not get to the 147.05 in the short term, okay, which is what I was watching for, so I could initiate another short. Had we not had broken through the 145.07, I probably would have taken a short, but I stayed away from this one as well, because when the charts are ugly, that's when it takes discipline, and there's contradicting signals. That's when it takes discipline to just say, okay, you know what? I made money on this downside here. It stopped me out, and I was in the money, meaning I made a substantial amount of profit. I'm happy. I take a step back and let the market do what it needs to do, because especially it is the week of options expiration. You take a step back, you kind of watch it, you wait for a pattern to be created or some kind of signal for you to jump back in. Don't just jump back in just because you got to be in the market. To me, in my opinion, staying on the sidelines is an actual position. So you can be in, out, or on the sidelines. Okay, so it is, and it does take a lot of discipline to do so. I've always had that problem when I first started. I always needed to have that feeling of being in the market, but sometimes you just gotta say, you know what? I'm gonna wait. I'm gonna wait for the signals. I'm gonna wait for what I need to see before I initiate another trade, right? So I'm gonna just step off my soapbox real quick there. Give me 1 second. Sorry. Anyways, so we went right into this 144.30. Actually, if you look, the tail went all the way into the 144.07. So we got to bounce back up into the 145.07. I'm sorry, 144.07 here, and then a dollar more. Oh, that's interesting. The calculation actually gave it one clear dollar higher, so it's a 145.07. And then we on Friday we just have this huge gap down, right? And we sell off at down $1.30 on the SPY. Now, something to keep in mind: we did not get into the 50 moving average, okay, to constitute a bounce, right? We went into like this sort of double bottom kind of thing here, but it was a very short double bottom, so that to me doesn't look very good as well. But one thing that is on the positive side is that, okay, you know what? Let me just take a step back because I don't want to start babbling, because it's a very confusing chart as of this past week. Okay, so let's look at what is positive and what could potentially bring this market higher. Just looking at the SPY, not looking at the dollar or anything else, just looking at this chart right now. The facts are we are in a daily uptrend, okay? And because we're in a daily uptrend, that validates the weekly uptrend. Okay, let me just switch to that real quick. Alright, switch to the weekly chart on the SPY. I'm going to delete all these drawings here. There's absolutely nothing here telling me that the trend is changing, okay? But keep in mind that this could potentially be some sort of consolidation pattern right there, okay? Why do I say that? Well, we have this, okay, well, let me take a step back again. We have this low, right? Obviously another higher low, and another higher low, and another higher low, and so on and so forth. We have a high, right? We have a higher high, and we have another higher high here, right? So we are in a weekly uptrend. So uptrends, not uptrends, weekly charts are obviously for the longer term trader, but we are not long-term traders. We are short-term traders. That's how we make our money. At least that's how I make mines. Anyways, the question now is this going to be a higher high? Or, I mean, is this market going to continue to be a higher high? Or is this going to turn over and create some sort of higher low, or lower high, I should say, right? That remains to be seen. Keep in mind that on the weekly chart, okay, I'm just going to talk about positive stuff, right? Sorry. So yeah, so that's the positive. Right now, there's nothing saying that the trend has changed on the weekly, and on the daily, the trend is up. So let's switch back to the daily. All right, we're back on the daily chart here. Let me just load the drawings back in. Now that's a positive side to the daily. Obviously, you want to be with the trend. The trend is your friend. You want to swim with the current and not against it, right? I always preach about that. Another thing is we were able on Friday, even though this sell-off was a big sell-off, well, I wouldn't say big, but it was a substantial sell-off nonetheless. We did close above the 20 moving average, and we're still above the 50 moving average, and we are still above the 200 moving average. That's not really that much of a big deal in my opinion, but because they're able to save it and close it above the 20 moving average, that does show some strength in the markets. Do I see a lot of strength right now though? Not really. Okay. um, so it's kind of, I'm kind of like 50-50% right now, as to if the market's going to go up or down next week. And the reason is, there's no clear indication right now to me that there's going to be any type of, continuation to the upside or continuation to the downside. And even though I'm giving you the trend analysis right now, it doesn't mean that's what I'm looking for. Okay. But when I do enter the market again, I will tell you and create a video. So if you see a video during the week come out, then it's gonna probably be only like a 5-minute video, and it'll be just to let you know, hey, this is what I did. If I didn't already say it in the weekly video. Another key thing to the upside is this is an inverted hammer. Well, I wouldn't really say an inverted hammer, but it kind of looks like one if this tail wasn't over here. One thing about inverted hammers, stars, not stars, doji candles, those kind of things, it needs to be after a significant down move, meaning this is only 1 and 2 days. You know how I trade. I need at least 3 days before a pivot can be determined. However, if you look at this one candle here, let me just zoom in. I'm also a big fan of volume, and look at this volume. It's just unbelievable volume. Unbelievable volume. Okay. Now, this volume could potentially mean that we could go higher, but we obviously are going to have some resistance here at these two levels here. Why do I still have these two levels here? Because it seems to have a lot of significance. One, we got a bounce off here, which was no problem. Two, we tried to break out of this level, but this level was unable to hold, so we broke down. Okay. And then three, this still could potentially be pretty good resistance. If we pass that and we pass this and we get up somehow into the 147.05, then I'll tell you right now, if we go straight into this next week, then I'm probably going to take a short. That's hands down no problem. But let's just say we get into this level and we create a doji on higher volume. Okay, or we get into this level and we create a doji or shooting star, whatever you want to call it, on high volume, or this level, doesn't matter which level, at least one of these levels, then I'm initiating another short. And the way I short is I pick up some SDS, and all of you watching these videos should be able to afford some SDS, I think, right? I mean, it's not that expensive. It's like 20 bucks or something like that. Anyways, moving on, since I'm already into 12 minutes. That's the upside. Now the downside is that, well, we are showing a lot of weakness here, and we did try to break out of the 145.07 and we were unable to. We had this upper trend line over here that we broke up from, right? Let me see if I can edit this line here so I can make it a little bit longer. We tried to break above it, but we were unable to, and we closed below it at the end of the week. This shows me a lot of weakness in the markets. Okay, that doesn't mean that I think it's going to go lower, but it does show that there is a lot of weakness. Even though they were able to save it above the 20 moving average, it was a big drop, and they were unable to keep it above this upper trend line, which tells me a lot. In fact, I was kind of considering going long. If it created another day similar to like this to me would have been somewhat of a consolidation pattern. Okay, and I would have waited for this 147.05 to initiate a long position, short position. And you guys know me, I don't play the consolidation patterns because they're not as solid as the other indicators that I normally use. So even though that this has a lot of volume behind it, which is unusual for a Friday close to the Christmas holidays, it's just based off the news that fiscal cliff and all that other stuff. This is the reason why we have this much volatility, not to mention it's obviously options expiration week. And if you're new to these videos and you're wondering, oh yeah, I'm sorry, I should have explained it to you guys. The week that options expires on Saturday. And if you're not an options player, all you have to do is search Google on stock options and just read the very basic on what option contracts are. And then you'll understand that when you buy an option contract, it's you're buying it normally, not always, but normally from an institution who writes these contracts for you to buy. And because they're the ones who are writing the contracts, they're the ones at risk. Well, not only that, but you're also the one at risk. But they're the ones at risk of losing money because they're the ones who write the contract. But they also have the power to move the markets, not you, because they have the billions of dollars. And if you have the billions of dollars, that's great, but I don't. So I wouldn't be able to move the markets, but institutions can. So what a lot of institutions like to do is they move the market, they whip it up, they whip it down, they whip it all over the place, and they try to get people in and people out and whatever the case may be, and expire those options worthless to the point where it's not worth executing the options because of the Greeks and these other factors. That if you're not familiar with options, because of these other factors, it's just not worth executing your option or selling your option contract, and therefore expires worthless. And a lot of people do that because institutions have the ability to move the markets, unlike yourself, and that's why we have a lot of volatility during the week of the options expiration. So normally Friday, obviously you can't trade on Saturdays, so Friday is the last day you're able to execute or trade an options contract. Okay, so a lot of people think options expire on Friday, but they actually expire on Saturday. Regardless, it doesn't matter when it expires. The point is that whole week is normally a volatile week because that's when the institutions jump in. They start doing their game playing, they start releasing weird news, they start doing all kinds of stuff, and that's why we see this kind of volatility that we see, or we saw this past week. And a lot of people, they watch these videos and they're probably like, well, what are you talking about? Volatile every third Friday of every month, because that's when people think options expire. It's actually every Saturday, every third Saturday of every month. So you just count one, two, three. Actually, it's every third Friday. So if you just count one, two, three Fridays, then that week is the options expiration, the week that options expire, and that's pretty much the week that you're gonna have to watch for volatility, which is such as this. I mean, let me just give you an example. I got stopped out in the money stop, right, because they pushed the market higher. Had I stayed in the market, right, I would be right back to where I was pretty much right before I got stopped out, and I'd still be in the money, but I would be out of the money here, right? Um, Another thing that separates the pros from the amateurs is you have to have your stops in place. If you were an amateur and you didn't have a stop and you didn't stop yourself out, you're like, oh, I'm now losing money, right? And then it came back down on Friday. Now you're back in the money and you're feeling all strong and all, you're the man because you thought you made the right decision. And yeah, you pretty much did. But as a professional, as you get more experience, you would have been stopped out in the money because there should be no reason at all whatsoever. Okay, I take that back. Unless there's a gap up or a gap down and you have a stop within your trade. The bottom line is on a normal day like this day here, or it's a volatile but normal day. You should always have your stops in place because there is should be no reason why if after you're in the money you're out of the money. So if you took a short here, right, which is what I did, and I'm making money, making money, making money all the way down here, and then I didn't have a stop, and one day I'd be like I would have lost over 75% of my profits, and the second day it just took 2 days of this big rally of these big rallies, and then boom, I am now underwater. There shouldn't be no excuse for that, and a lot of amateurs fall into that trap. To be honest, I was looking for one more pop, one more candle, the same exact size as this candle here, right into 147.05, and that would have been. I would have released a video during the week, and I would have told you guys I would have taken a short, but that just didn't happen. Anyways, here I go again, rambling. Just want to make sure I let you guys know, what I'm thinking. All right, so the downside, right? Continuing on to the downside. Again, if we get into this, these two levels here, plus the 200 moving average, I'll probably take a long trade if it gets there. Right now, we could potentially go higher already, so just keep that in mind. If we could definitely pop because I see nice volume here. But again, I'm not gonna just jump in just because I think of something. I'll need the odds to be in my favor for me to think anything. But let me give you something that's a little bit contradicting here, and I think it's going to be interesting for you guys to see. Switching back to the weekly chart again, and I would have talked about this a little earlier, but I didn't want to be mixed up and stuff. So anyways, we're talking about the downside now. Yes, we're on an uptrend, but the downside of a potential lower high here is that, what is this? This is a shooting star type doji candle, right? Yes, we did close above the 200, the 20 moving average on the daily. I'm sorry, on the weekly chart, which shows some strength. But look at this candle, and look at the candle before that. Okay, now let's bring this up. Let's bring this volume up here. The candle before that, which was last week's candle or the week before, was somewhat of a gravestone doji. And in the Japanese terms in candle charting, they say if you see a gravestone doji after a up move, and this is a legitimate up move, you have 3 days right here, right? That's my rule, 3 days. Um, you should never go long, or you'll be taken to the grave. Basically, you'll die if you go long and you see, because you see a gravestone doji. That's a Japanese candle chart uh, definition of a gravestone doji, I guess you could call it that way. Anyways, long story short, this did not indicate a short trade for me though, because the volume wasn't higher than the past 3 days, right? However, we now created a same somewhat of a doji candle, gravestone, kind of like a spinning top or whatever, but we closed above the 20 moving average, which shows strength, right? But look at this volume. This volume is higher than, geez, let me see. We haven't had volume like that since this is June 11th, the week of June 11th. Is 6 June? I think so. Anyways, the point being that it's contradicting. Yeah, we have a reversal candle. We have a reversal candle on volume, but we did close above the 20 moving average. Now, what weighs more? I would say that the 20 moving average doesn't weigh that much. Why? Because we've just been trading around the 20 moving average. It holds no significance anymore, in my opinion. On the weekly chart, okay, just to make that clear. We have now an indication of a potential reversal on higher volume. Next week, we could start coming back down, or we could come down, bounce off this 50 moving average, and continue higher, which would still validate an uptrend. Until this guy, okay, let me just make myself clear here. Say we create a higher low, right? We would need to say we reverse. We would need to close below this low here, right? And then maybe possibly go higher, but not higher than this high, right? And then low again. That would constitute a trend change on the weekly. Now let's just say we come low, but then we come a little higher like this, and then we come down like that. This still means we are in an uptrend, because we have a high, we have a higher high, we have a low, and we have a higher low. You see that? That means the trend is still intact. So just because that this could be a pivot point, it depends on how much further we go down. And of course, if you got a lower high but a higher low, then that's going to create a triangle for you, and that's something we talked about in the last video. So long story short, this analysis is very difficult because of last week's news, plus we have all this fiscal cliff, and unfortunately my heart goes out to all those kids who got shot in that school from that crazy guy. To be honest, I just to babble a little bit. I'm not for or against, okay, not gun control, okay? I mean gun bans. And what I mean by that is that you guys may obviously disagree with me, but you guys can, chime in and talk to me about it if you want. But for me, I'm okay with a gun ban, right? Meaning absolutely 100% no firearms ever. Meaning I don't get firearms, you don't get firearms. The military, the cops, the gang members, no firearms ever exist. I'm okay with that. I got no problems with that. Okay, ban them all, that's fine. But because guns were created, I believe, since the 1800s, it's just impossible to remove all firearms from the face of the earth. And as long as somebody owns a firearm, that person who does not own one will be always at a disadvantage in case there's some kind of confrontation, right? So, being that we have that, disadvantage, then I believe that we should be able to defend ourselves, fighting fire with fire, only ninja can kill a ninja, that kind of thing. Obviously, though, we should have some controls in place to, weed out the crazies from the responsible ones, and maybe training would be good too. At the same time, what a perfect example of federal manipulation is this. It sounds like everybody's trying to use this shooting, and yes, it was very unfortunate, and my heart goes out to them 100 million times. But the whole point, excuse me, is that the government or whoever the people who are against firearms are using this as to their advantage to have some sort of gun ban, and the president also feels the same way. But the reality and the fact of the matter is, since this economy has gotten bad, we've been pulling money out of mental institutions, and that's where we need to be putting money into. At least where I live, the state government here has pulled most of their money out of the mental institutions, and so they have no funds to help these mentally ill people who need them, and that's where the actual problem really is. I mean, to be honest, um, if you had some kind of marathon and I jumped into a semi truck and I just decided to steal the truck and run everybody over, I'd be taking out a lot more people than anybody in a school. And what I just effectively done was I've used a semi truck as a weapon. And so to me, a gun is not a weapon until used as something in a destructive, offensive, harmful manner. But that's just my opinion on guns. I'm not for or against. I'm pretty much neutral. If you guys are gun owners, I am too. Okay. But I'm kind of like, hey, you guys want to do a gun ban? That's fine. I'll hand in my guns. I'm cool with that. But you know what? You guys hand in your guns too, because the whole point of the Second Amendment is for us to defend ourselves against the actual government themselves. So, anyways, I'm into 25 minutes. You guys can obviously fast forward these videos. So I'm gonna start talking about other things now. The next one I want to talk about is gold. Now this gold chart is interesting. I don't know if I talked about this in the previous video, but I must have, because I made these calculations on December 18th. So that's not too long ago. Yep, December 18th. Okay, so yeah, just rewind the videos. I should have talked about gold already. So we had this almost tag up here, which I missed, and I really wished it tagged it because I actually had an entry in there and I just barely missed it. Anyways, I had new calculations. Obviously, I wasn't following gold for a while, but this is the GOD, just to let you guys know. It's the ETF that tracks gold. And I had a calculation here at 160.71. We went almost right into the 160.71. Oh, let me just back up a little bit here and explain to you guys something real quick. Whenever I get a miss on any chart, for you who have been following me for a long time, right? Let me just zoom in here, and I'll get from this level to the top of this candle here, just roughly. It doesn't need to be exact. So when you follow my videos, you can kind of do this as well. Oh, anyways, let's just eyeball it since it's so small, and then kind of zoom into where we were a little while ago here. You'll see that this here is pretty much the same as how much I missed it above. So these calculations, although they work good, sometimes they're off and they're not perfect. But when they're off one point, they're going to be off on another point, okay? But these calculations seem to be working pretty well. So we have the 160.71, and then we get an intraday bounce, and then we gap down, and then we get another bounce higher here. So that would have been a very, very nice day trade. And then we have another drop in gold, which is at 159.22 on pretty good volume, and then we get another bounce right into the 160.71 level before pulling back and closing right at I believe 160.33. But the high of this candle, believe it or not, was 160.76, which was only 5 cents off. So these two levels have already held up. Now with the GLD, a lot of people would say, well, look at this. This is a nice doji reversal hammer type candle, whatever you want to call it. It is a reversal candle. It is on substantial volume, which I really, really like. But if you look at almost anything out there, there's a lot of volume. There is a potential that this thing could reverse. The only problem I have with this reversal, and the reason why I didn't take a long trade on this, let me see if we have any other resistance points. Oh yeah, we have this gap window right here. It's beautiful. Yeah, that would have been even nicer. Anyways, the problem with this is we have the 200 moving average right there. Um, to me, I didn't want to take this because the moving averages were way too close, meaning it could hit this and then bounce off. In a day trade, that wouldn't be a problem for me. But as a swing trade, that 200 moving average kind of scares me, so the odds are not that much in my favor anymore. So with that said, I would, if you wanted to go long, you could. But if you get a bounce off of this 200 moving average, then I would stop out. Had you taken the trade down here, as indicated in the other video, I missed this trade unfortunately, but had I taken this trade, I would have been in the money and I would have already had a break-even stop. If you guys already took this trade from watching my previous video and you're long gold, just have a break-even stop, just protect yourself. But just keep in mind that gold is famous for gapping. You see all these gaps here. So even with a break-even stop, you just want to be careful that even if you have a break-even stop, we might open up lower over here and you end up losing money. So that's one thing about the GOD that you have to watch out, even with stops in place. But you know, that's what that's what separates the amateurs from the pros. You can either do one of two things. You can put a stop in place, an automatic stop, or you wait for the market right before the market closes, and you can determine if it's going to continue lower or not. I'll leave that up to you guys. But to be honest, I never took the GLD trade. All right, this is a chart of the SLV. Let me load drawings here. Okay, so I believe, I don't know if I talked about the GOD, but I thought I talked about the SLV at least. Anyways, taking a look at the SLV here, we had a lot of volume. You see, but this wasn't really a reversal candle, yeah. You gotta just keep that in mind. I think I did a bigger analysis here, which is pretty interesting. Yeah, just rewind the videos, a couple of videos. I'm pretty sure you guys will, if you guys have been following me, you guys would be pretty, what is that word called? Uh, you guys will be familiar with what I'm doing now. What I normally do is whenever there's a triangle created, I grab the closest to the middle pivot point and I use this as a indicator at the breakdown point of where it breaks down. Um, and then I had these three mathematically calculated levels, and again, mathematically calculated levels does not guarantee anything. It just puts the odds in my favor that I'm going to get one of three things: an intraday trade, a gap, or a swing trade, either up or down, right, for either way. We went right into the $30.11 level, and then we went right into the 200 moving average. Why didn't I take a long trade? Because it went in there. Obviously, because we have this triangle, and again, I had this estimation here coming from the middle pivot point of the triangle saying that it could potentially go lower. So why would I go higher? Would be a counter trend trade in my opinion, and that's too dangerous for me, especially SLV kind of trades similar to gold where there's gaps all over the place, right? Anyways, we gap down even lower, and then we get into the 28.75, and then we get a bounce. So these levels are holding up really, really well, even on the SLV. It just amazes me sometimes. Okay, I'm obviously, I don't want to sound like I'm bragging about these levels because I can't take credit for them. It's just a mathematical calculation. There's nothing psychic about anything. That's all it is. I can tell you nobody else has it because I've never seen it. Well, just because I've never seen it doesn't mean nobody else has it, but I invented it, so I can pretty much be sure that nobody else has it because I've never told anybody this mathematically calculated this calculation. Anyways, the next level here is 27.73. If we get here, would I take a long trade? I don't know. I'd have to look at what the market is doing, what the dollar is doing, and all that other kind of stuff. It would not be a bad trade because we do have this pivot point here. And we could potentially just say, I could potentially just say this. Well, if I take a long trade here, right? Say I put in a long trade at $27.73. I go to sleep, I wake up the next day, and we're sinking below that. Say we're down here. I will wait till the end of the day before determining if I'm going to stop myself out or not. But I will tell you this, I will not wait more than 2 days. So say, as an example, like any level, say, we get into the 27.73, I take a long trade, but we close down here below the 27.73. I will make a determination based on what the market is doing if I'm going to stop myself out for a small loss now, or am I going to hold on to it. Now, this is again, I would need to see the next day close below the low of this day, and then boom, I'm out. That's it. Have a nice day, move on. Why? Because I need capital to trade other stocks. You know what I'm saying? But it really depends on what the market is doing, what kind of signals I'm getting. For example, if I get some sort of hammer candle in this 27.73 level, then that's the candle that I'm looking for on high volume. Then I'll definitely take a trade to the long side in SLV, but I will definitely let you guys know if that changes. Okay. Wow, I'm into 35 minutes already. Sorry about that. Let me just skip straight to the questions then. Jeez, I talk too much. Sorry. I'll do better next video, in the next video. By the way, thank you for the comments that you guys left me. I really do appreciate all of those. There was a question here to do a analysis on the XIV, which is inverse. So I tried to do my best on it. It doesn't look the greatest to me for this, and my mathematical calculations don't always work out at a high percentage rate as much as the SPY would, because this is just, it's a inverse, right? Okay, let me start. Sorry. Let me just get through this as fast as possible, and I'm very sorry if the analysis doesn't turn out to be as good as you expected it to be, but this is I couldn't find very much about this at all. Okay, but a couple of things. First of all, we are into some support here. I don't know why my chart software is doing this. We are into some support. Why? We are into support because we're into this gap fill area right here. Okay. And I'm going to talk about long and short. So we're into support, so there's a potential we might get a bounce because we're in the gap fill area, and we actually did intraday get that bounce. So if you had already taken the trade at this gap fill level, then you should already have a break-even stop on here. Okay, so just make sure that that's in place. Another thing is, even though this is not a reversal candle, we do have very high volume here, which is another thing I like, which could potentially mean that we could go higher. Okay. That's number two. Why wouldn't I? But that's the only things that I can see myself. I'm sure that I'm missing a lot that other analysis or other people who do analysis could see. But again, I've done so many things in my past that I like to just stick to what works for me. So if you have any other like Fibonacci retracements and stuff like that, and I don't think I tried doing a fib on this, and I don't think I saw anything. Let me just try it again here. I'll start from that pivot. Oh yeah, there you go. How about that? At the 25.25 fib level, we have some support there as well. Okay, so that's pretty cool. Now, the reason why I wouldn't take this trade, say tomorrow, is I like to take the trade right when it's here. You know what I mean? Right when at the gap fill, I take the trade, and that way I can already have a break-even stop if we have an intraday bounce, which is what we did on this day here. I don't know why it won't let me zoom in very nicely. Hang on. Alright, so there we go. That's much better. Sorry about that. Okay, so I had two mathematically calculated levels at the 1535 for a bounce and a 1229 for another bounce. I did not get one here at this gap fill level here, but it doesn't mean it's not going to get a bounce. Okay, so just keep that in mind. Now, the only reason why I would see this as a not long trade, I should say, something that I wouldn't take, I mean, yeah, we could get a bounce, but something I may not take, is because, again, the moving averages are so close. I mean, it's going to give a ceiling to this guy, and there's a potential that this guy could possibly head lower. Okay, but in your favor, if you are long, and if you want me to look at any stock, just keep in mind, just say, I'm thinking about going long this stock, or I'm thinking about going short this stock. It makes it a little bit easier for me, because then I can just do a one-way analysis instead of a two-way, like what I think is long and what I think is a good long or a good short. Anyways, yeah, that's the only thing I see that's potentially a sour taste in my mouth. Also, we only have 2 days here, a 2-day drop before this day here. I need at least one more day. If there was another day here, then it would be that much better. This candle would definitely be more of a substantial, odds in your favor kind of thing, especially on this volume here. So what I would do is, for me, if you're already long, just have a break-even stop. This guy could definitely pop higher. There's no question. This 50 moving average, Although it's going to be a ceiling, I don't think it's going to hold very well. So I would have like this 20 moving average looks like it's curling down. So potentially while it's going higher, this 20 moving average could be coming down here. If this happens, then this area right here, because you're going to be refilling the gap here, right? And you're going to have pressure on the 20 moving average. I would expect somewhat of a pullback there, not to take a trade, but to actually put your in the money stop in this area here. So if we continue higher, so break even stop here, and when you hit here, have an in the money stop where you just take everything off the table, or you sell 75% and see if you can go even higher. And then you put the rest of the 25% as a break even stop, and you just set it and forget it, just like the rotisserie oven. Holy crap, in 40 minutes already. Very unusual day for me to be blabbering this much, but if we can get into the 1535, meaning we can continue down into the 1535 level, then I would probably think about initiating a long play. Would I do it myself though? Again, it really depends on what the market is currently doing, what kind of news is out there. I'm pure technical, but at the same time, I mean, you just got to have things in place. Like if it is the week of options expiration, and that's if you're not in the market by that time, then I normally stay out during that time if it's as volatile as it was this past week. Anyways, thank you very much for everything, all the comments that you guys put. Again, if you want me to do an analysis on any other stock, just let me know if you're thinking about going long or short. Um, but as of now, I'm taking a step back. I'm going to wait for a pattern. I'm going to wait for something to develop first to indicate to me that I should be going long or short this market right now. So, again, thank you very much for stopping by. God bless to you all. Good luck to your trading next week. And, I promise the next video will be a lot shorter. Okay? And I hope to see you in the next